2008. In response to the financial crisis that began in 2008, the Fed lowered the federal funds rate to a range of 0% to 0.25% and began using a new monetary policy tool known as quantitative easing. Quantitative easing involved the Fed purchasing large amounts of government securities and other assets, such as mortgage-backed securities, in order to increase the money supply and lower interest rates. The reason for this decision was to stabilize the economy and provide support to financial markets that were under stress. 2009 to 2015. The Fed kept the interest rate at a range of 0% to 0.25% throughout this period, as the economy struggled to recover from the financial crisis. The Fed also continued with quantitative easing program, purchasing large amounts of government securities and other assets to help stabilize the economy. The main reason for this decision was to provide monetary support to the economy as it recovered. 2015. The Fed raised the interest rate for the first time since 2006, signaling the end of the zero interest rate policy which was in place since 2008. The Fed raised the interest rate by 0.25% in December. The reason for this decision was that the economy had improved and the labor market was getting stronger, and it was felt that the monetary support was no longer needed at the same level. 2016 to 2018. The Fed raised interest rate again in a series of gradual increases, signaling the start of a gradual tightening monetary policy. The Fed raised the interest rate by 0.25% several times during this period, with the reason being that the economy was improving and it was felt that the monetary support was no longer needed at the same level. 2019. The Fed lowered interest rates 3 times, with the target range for the federal funds rate reaching between 1.5% and 1.75%. The reason for this decision was that the economy was showing signs of slowing down, and the Fed wanted to provide support to the economy to keep it from entering into a recession. 2020. The Fed lowered interest rates again in response to the economic impact of the COVID-19 pandemic, bringing the target range for the federal funds rate to between 0% and 0.25%. The reason for this decision was that the pandemic led to a sharp economic downturn and the Fed wanted to provide monetary support to the economy to mitigate the impact of the pandemic on the economy and keep it from collapsing. 2021. The Fed continued to keep the interest rate low and providing monetary support to the economy as the country continues to recover from the pandemic. The reason for this decision is that the recovery from the pandemic is still ongoing and the Fed wants to ensure that the economy continues to recover and not fall back into a recession. 2022. The Fed's low interest policy and thinking that inflation is temporary brought with it the highest inflation in the last 39 years for the USA. Finally, the Fed, which realized that inflation was permanent, decided to increase interest rates. The Fed, which started to increase interest rates in March, increased interest rates 7 times until the end of the year. The interest rate, which was in the range of 0% to 0.25%, was increased to the range of 4.25% to 4.5%. It's important to note that the Fed's interest rate decisions are not made in isolation and are based on a variety of economic indicators such as inflation, employment, and GDP growth. Additionally, the Fed considers a wide range of factors such as global economic conditions, political situation, and market sentiment. The Fed's interest rate policy is a constantly evolving process and will continue to adapt as economic conditions change.